Hey everybody, it's Brett from Moonstream with a market update. Today we're going to talk about Bitcoin and is the top already in? I'm going to show you a study that I've already done that suggests that it's possible. I'm not going to give away if I think it's happening or not. I'm going to show two scenarios and what I think is coming up for the markets here from here in September. And so with that, let's go ahead and dive into the charts. Here we have a chart of Bitcoin. And as you can see, we faltered here a bit at the 114,000 level. Up here at 124, 124,000. The retracement here, by the way, was when the total market cap hit $4 trillion. The total market cap in the last market cycle high was $3 trillion. So make sure you're paying attention to those big round numbers on total market cap because invariably they are rejection points and we usually see retracements from that. So we're going to unpack that here in a minute. A big bearish engulfing candle right here and one of our bearish ERI or early reversal indicators that we have created. It's an accidental discovery that I believe is catching programmatic institutional buying and selling. We did see a bounce out of this range down here in the green zone around 108,000, where we can see clearly with our buy blocks indicator that there are heavy buyers here, even heavier down in the $100,000 range. So if we were to push down in that range, I would expect that to get a sizable bounce. However, from right here, we are rejecting at this $112,000 level that was key support all the way back here, tested a few times, turned to resistance. So we are seeing that reject earlier today based on the non-farm payrolls, the unemployment numbers coming out of the FOMC and not the FOMC, wherever the numbers come from. So the labor unemployment that came out today came out very cold. So we saw a bit of a rally early on, and then we saw it sell off, pushing right up to the 50-day exponential moving average in green and continuing with this downtrending channel. So really what we need to see is a break above that 21 and 50-day EMA shown here, that orange and green line, the 21-day EMA also acting as resistance. We use the analogy as being under the ice. If you're out on a lake in winter, do you want to be on top of thin ice? Do you want to be on top of thick ice? You want to be on top of thick ice so you don't fall into the freezing water. So those are these two EMAs that we use, the 21 and the 50. So that orange line has been a great support indicator for Bitcoin along the way. And if you were to fall through that and fall below, the green line, the 50-day, is that thick ice where you can generally bounce and bounce off that and get back above the thin ice here. But when you're below both of them, that's when we're drowning and that's when we're in trouble. So once we got down below this area a couple weeks ago, I started to say this time to get out and watch what happens here in the coming weeks. We really need that price above the green and the orange line, the thick ice. We need to get back above here, really above that $114,000 range, and to take out this sell block. So it's not looking terribly good right here. And so we'll have to see what happens here with the very likely rate cut that's going to happen. Will it be a sell the news type of event? We'll see. Jumping to the weekly chart here, we're holding at the 21-week exponential moving average and not seeing a lot of clear signals, although I am seeing some bullish divergence on the weekly chart, showing our bullish divergence on the RSI Pro, which is another one of our proprietary indicators, showing here, and these have been very powerful in showing when prices were about to reverse. Back here, when we see these align, as always, these are very high probability signals. You can learn more at cryptomastery.org and get your hands on these signals. These are the best you're going to use anywhere. I don't care what you're using. Add these to your indicators. They will help your trading. They are built by a 25-year quant engineer, programmer, and trader who uses them every day. And in a moment, I'm going to show you some beta indicators that we're playing around with that are not for sale, but just to kind of show you, this is the kind of stuff we're working and playing around with and always making this simpler as we go. But let's not get to that just yet. On that, the RSI Pro, rather bullish divergence. Last time we saw the alignment of the ERI, this green arrow, and our trend strength indicator going green, and that RSI Pro bullish divergence right down here on that beautiful bounce from 76K. So we are looking for alignment with all of these for the bigger moves, and we'll be watching these other signals to see if they start to turn green again. But right now it is not clear, so we're being cautious in this range, even though we have on a daily basis our ERI caught this bounce out of a buy block bullish early reversal indicator, our trend strength indicator, green and above 20, and then that RSI Pro bullish divergence in that circle. One of the things that we are also watching are the cycles here. So here's a great indicator showing the market cycles, and it closely overlays with our signals very often. So we're watching for that, and we did have a daily cycle low put in just the other day here on September 1st, followed by our early reversal indicator. So I do imagine we will push up here, probably back up to this 114 level, pull back and find support at 112, and then start pushing up higher. But we do have sales resistance overhead, as we can see. So more than likely, it's going to be October, November before we start seeing those really rapid rises in prices and into price discovery zone, if we can get there. So with that, let's jump over to another study, and then I'll come back and show some altcoins from there, but and we'll look at total market cap also. But I wanted to jump here over to this chart. This is a new study that I was just working on, essentially showing the timeline from all-time high breakouts between those and also between all-time highs. So in the purple boxes, we can see that the all-time high breakout ranges. So from this breakout back here to an all-time high to the next all-time high breakout, that was 1,492 days or 49 weeks. And so, I'm sorry, these are months, 49 months. And then on the next one, it was a little bit shorter. And this is important when we look at the all-time highs. So this one, we went from this all-time high to this one was only 43 bars, 43 months and 1,310 days, and then went back right back to around 1,431 or 47 bars. So that was the range between all-time highs. But more importantly, in the green box, we're looking at the all-time high between those highs. So from the all-time high back in 2013 to the new all-time high bar here, that was 1,491 days, almost exactly between those all-time high breakouts down below, offset by about 6 or 8 months. That's not really important. 49 months or 1,491 days. Similarly to this being shorter, this was shorter as well. These all-time high from 2017 to the 2021 high here, that was 46 bars or 46 months, 1,400 days. And so from that, pretty similar in terms of these up in the all-time high breakouts and the highs. But regardless, if we were, here's the important part. This box here, I have used the 1,492 days rather from this high in October of 2021, projecting out to, if we see that 49 bars like we did back here in 2017, 2013, 2017, that would suggest that the next all-time high would be Saturday or in the month of November rather. This is a monthly chart, and so sometime in November, seeing that high, which we would expect if we were to see a repeat of that 2021 cycle high. Now, here's the thing though, if we use this shorter time frame and it's only was 46 bars or 1,400 days, then we're looking more like this, in which case, is it possible that Bitcoin topped out right here in this candle in August? So I don't think that's the case, but we want to be aware of the fact that the last cycle here, just copying that over, was only 1,400 days, and we thought we were going much higher, and then we didn't. So we have to really watch carefully what happens in the coming days and also on our weekly charts, because we have our proprietary signals for a bear market signal and the one that called the last market cycle high. So just show you this, what I'll be looking for very carefully and calling the next cycle high like I did the last cycle high is the combination of these three indicators and actually a chart setup. So bearish early reversal indicator, again, this is showing institutional programmatic buying and selling. The arrow is just a visualization. There's certain quant work behind that. It has to move from a certain area above another level within 3 time periods, and there's a Keltner channel mixed in. So if you're like, hey, that's cute, you have an arrow, guys, this is just the visualization of it. You probably don't want to see the actual oscillator, trust me there. And then we're looking for confluence with our trend strength indicator confirming going red below 80, again on the weekly time frame. And this has played out time and time again, as well as our RSI bearish divergence. That's how I was able to call the top back in November of 2021, along with looking at things like pi cycle top and a monthly MACD. So are we seeing those same conditions now? We are not, but I'm watching very carefully and to see if that's in play, because if we just turn this off briefly on this weekly time frame. We didn't have a bearish engulfing candle. We kind of did back here, though. It's been this correction was not entirely unnoticed. We had our ERI bearish engulfing candle, and then we had bearish divergence a week later, and then we had another ERI, and our trend strength indicator is rolling down below 80. So somewhat concerned, but at least we're getting some bullish divergence here at that 21-week exponential moving average. I think we're fine, but we want to be paying attention to this, and if we start losing those levels, then guys, we could be coming down to this $100,000, sub $100,000 level again, and we'll have to keep an eye on that. Okay, moving right along, let's go to our study on the USDT or Tether dominance. We're watching this carefully as well because this blue pattern here was from the last cycle. If you haven't seen this, we've been following this for a while. And by the way, please do like the video and subscribe so you don't miss any of these important studies that we're doing. Trust me, I know there's a lot of other people out there doing things. All of my work is original, and you'll find things here that you won't find anywhere else, including my projection for the next bear market low, as well as potential high around 245,000 if we can break out again, probably in 2026 at this point, and based on interest rates coming down. At any rate, this is an inverse relationship. Tether dominance means more money flowing out of Bitcoin and crypto into stables and cash is when this peaks, and generally it'll bounce off of this long-term trend line going back to 2018. When this pulls back to this uptrending line, this is when typically we see market tops. So looking back here, this was in that March, April, May of 2021 before we had that summer crash correction in June, July. And then we saw this revert back to the line right in that market cycle top in November 2021 and then into the bear markets. So these are the same fractals. Fractals don't always play out, but as of now, we're watching this. And certainly, this could be pushing higher. This could have been the top. I'm not going to say that it wasn't. I don't think so. None of the other top call signals are there. Pi cycle top or the CBBI are not showing this, but we have to watch the evidence here. And so the question is, are we going to see something like that and push up higher into crypto correction zone, followed by a small pullback and then into crypto crash in the bear market? Or are we looking more like a triple confirmation and having a few more weeks in here, which would allow for that bull market into October, November, right in there, and then start pushing up here for that correction, and then seeing another one, last pullback here for a market cycle top around that potentially March 26th. Now, that would mean that we're dropping interest rates at the 3 remaining meetings here this year, which is likely, and maybe another 4th cut in January and another one in the first quarter. So it's entirely possible that's what's happening. We're going to take a look at the DXY, which is really starting to fall. And so this is a big question mark, though. If we do start to push up here on the Tether dominance, that means, again, money's flowing out of crypto into stable coins. People are getting out of the markets, and we don't want to ignore that. All right, so that's I'll be updating you guys on that. Again, if you want updates to that, make sure you're subscribed with the bell notification on so you're notified when we publish more of these. I'm trying to get more videos out, but I've just launched a new mentoring program and to have 20 high net worth clients that I'm working with, and our other services. So I'm doing my best to update here for you guys. And typically I'm $500 an hour to consult with. I'm not here to sell anything, but hopefully, guys, you guys appreciate the intel and the alpha here. This is the study we've been talking about. The path to 150,000 to 200,000, created this 2 years ago, and based on the Fibonacci projections from the last cycle high to the low, which correctly forecast the high in 2021 around that 69K level. That same study here done on the high low from 2021 projects and has been projecting the cycle highs or these milestones we've been hitting. So that 1.618 from this high low put it right at 100,000. We hit that, pulled back, that nice correction back to this trend line support, which we are now retesting. The 2.618 puts us right at about 154,000. So this blue line, incidentally, is the pattern from back here softened a bit because it's a logarithmic chart, and to make it fit this potential chart doesn't mean that it has to. But one of the things that concerns me a bit is we were on track for a steep parabolic rise, and we've had to now modify this. It's looking more and more like this is the trend line support. But it's also possible that the trend line sort of increases in velocity later. So we have to kind of do this. If it were to push up higher and still get us to these higher levels. So I'm massaging that a bit, but we will continue to sort of see if this is still in play or not and invalidate it if it is. So 150K would be that 1.618, that 2.618, the 3.618 projection. The Fibonacci's do tend to play out, and we saw that back here at the market top. Doesn't mean it has to happen again, but it puts us at a potential $200,000 target. Now, whether that happens, I'm extending the timeline out. We're kind of looking in January of 2026 again, and that would make sense because the rate cuts are coming late. We were really waiting on some quantitative easing as well, so we have to kind of wait and see for that money to flood back into the system. All right, and here are the 11 reasons why we could see these targets prices coming in. Potential path to 150K. We have BlackRock, Fidelity, ETFs. All of those have happened. Again, I started this list back in 2022 and been adding to it all the way. You can skim through these. I'm not going to go through it again. We've covered it before, but we're still waiting on these number 10 and 11 to happen. The global fiat debt bubble certainly coming to a head. Lots of theories there on what they're going to do in terms of letting the interest rates go up and have a recession and then pump the economy full of money. Quantitative easing is a lot more acceptable when the markets and the economy is in the toilet. So that could push out a ways, but the global fiat debt bubble, certainly a problem. Our debt is uncontrollable here in the United States, and the only way to get out as they're floating is possibly revaluing gold at a much higher rate and price, selling a bunch of it to buy Bitcoin, and then continue to support that. And the price, if it goes to $1 million in 10x's, that means we'd have to accumulate about $3 trillion worth of Bitcoin and hope for the 10x, getting it to 30 to 35 trillion. Now, there's a lot of speculation there, we'll see, but these will all contribute as they start to happen and more demand for Bitcoin. Number 11, we're already starting to see that too. Flight to quality pensions, 401ks. The new administration, President Trump, just announcing that they are going to allow 401ks and pension funds to start investing. There's like $7 trillion in assets on the sidelines waiting for that. So we're just kind of waiting for when they will start deploying. And then, of course, the sovereign wealth funds. So you can review these studies in more detail, over on TradingView. If you Google Brett Fogel TradingView. And I'm trying to get through this quickly, everybody. So here's the DXY inverse relationship with the dollar or with Bitcoin as well. Seeing this heading down and waiting for this breakdown. I really want to see a breakdown of the dollar on this trend line and head down, because then we'll see a Bitcoin rally in Bitcoin rally zone. And if it comes back down below this 95.5 level, then we're into the Bitcoin super rally zone and into this window of where we would likely see that blow off top, and again coming into November or December into 2026. So that's what we're waiting on, and seeing this dollar come down. If we start seeing the dollar break higher, which I don't think is it's very unlikely, that could spell trouble for a near-term correction. So we're keeping an eye on that also for you guys. Here's a market top signal called the Pi cycle top. You might be familiar with it, and it's correctly called the last tops over the past. Probably needs to be tweaked a little bit because this one barely got there in the last cycles, and so it's possible that it will get almost close, but still, this is another reason why we haven't topped yet. The indicator, there's two paths potentially to get up to this range. One gets us to that $245,000 level, and we almost would need that for the oscillator to catch up. The bicycle top happens when the orange line touches the green line, and you can go in and look at the settings if you want to. It's really a long moving average, 350 period of 350 week moving average, and then a short moving average of 111, and there's a formula in there, so you don't need to know that. All right, so potentially putting that here, or at the current rate, we'd have to push out the timeline of that. So it's looking like, do we get the parabolic blow off top in the normal range, and how high do we go? We'll be watching that very carefully, but all the way down here really aren't there yet. We're not there yet, so that's good news. All right, all that being said, let's hop back over into the daily charts and look at some other coins. I want to look at the total market cap as a clue, and then we'll pretty much wrap up here. I think this weekend we'll probably see some consolidation, and then next week see the market trends reveal themselves. But lots of sell pressure on this total market cap. We can see that because we visualized the selling order block pressure, the concentration of sell limit orders in this indicator. And invariably, we've seen over and over again, prices will push up into the sell zones and retrace. This is one reason we were getting out here. Again, when the market cap broke $4 trillion, that was the top, and got a bit above it, but that's what happens at those big round numbers. So, and then again in here, it sold off. Similarly, the best times to buy are in these green blocks where there's heavy buy pressure on these buy block alerts back here in April of 25, and again here in June of 25, and then even again right back here, even though we didn't get a buy block, but here we saw that. So, things are a bit overbought. There are sellers overhead. If we were to sell off and come back down in this range, that wouldn't necessarily be a bad thing. It would give us a chance to buy back in lower. But if we are to head higher, we're seeing these moving averages start to even out. We would really need to see this thing push up here soon and break through these sell blocks. And so that is one of the downsides of the current market setup here. Heavier sell pressure on total too. And it's interesting because we're not seeing that sell pressure on ETH. At least it wasn't there yesterday. So the ETH is poised to break out. There isn't sell pressure. It's in a buy block, so that is worth noting. ETH looking stronger than Bitcoin, and that tells me that money is rotating out of Bitcoin into Ethereum. And if you don't already know the path to altcoin season, look up that graphic because that shows the money flow out of Bitcoin into ETH and other layer ones. So we're starting to see that trickle down effect, and that also means altcoin season isn't here yet. It's on the way, but we are not anywhere near alt season at this time. Here's Solana also rejecting at a sell block and seeing volume decreasing. So I think the play right here is ETH is setting up for a nice run and coming out of this buy block there and pushing up possibly to 5,300. And then also I like Pendle. Pendle's looking good here, coming off the bottom of an upward trending trend channel. So we've seen this beautiful trend channel here coming off the bottom numerous times, projecting prices on Pendle around $7 to $10 all the way up to $15 and $20 based on a Fibonacci. If we are to get that to alt season and a parabolic run, these are some targets that I'm sharing with private members as well as a couple other coins that we're following. But that's all I wanted to cover today here. And again, looking at these things from a little different standpoint than most people. Also want a really quick look at the CME and Bitcoin dominance. Bitcoin dominance has fallen down to this trend line, and in the past it has bounced off of that. We are seeing some of our indicators showing that Bitcoin should be and could be ready to rally again. Earlier today, it was looking like that, but then that economic data came out and poured cold water on everything. So wanting to see here what happens if we see Bitcoin dominance getting back up here, crossing up around this 60% level. That would be an indication that maybe Bitcoin's ready to run again. Otherwise, we're looking at ETH dominance, which still has some room to grow, and I think ETH dominance will continue higher up into this 15% range. And from there, we'll have to see what happens. So the only other thing I want to look at here is the CME, see if there's any CME gaps that might be ready to fill. If you're not familiar with that, you can Google, but typically when these gap open, they are a magnet for price to come back and retrace. So we don't have any near-term ones, but we do have some unfilled gaps all the way down here, believe it or not, at 92,000. And these, again, act as magnets to price. So we'll have to see. And there's, I believe, another one. That is actually the only one that hasn't filled. And that could happen in the bear market, and it's just a little one. But all the rest of these have mostly filled here. And I thought there was another one, but that on a shorter time frame, I think there is one. But on a daily, we don't have to worry about it so much. All right, guys, try to make this quick, and hopefully that wasn't too fast. You can always re-watch that and speed it up or slow it down. So again, this is Brett from Moonstream Crypto. If you'd like to learn more about crypto investing, go to moonstream.io. We're being called top 3% by our clients. And if you'd like help in this bull run and like have my help personally to create an optimized portfolio, go over to moonstreamcoaching.com/start, and you can watch a video and another short video for more information. If, again, you'd like to work with me one-on-one, and we can talk about that there. Or if you'd like to join our school community, if you're just getting started, go over to moonstreamacademy.com/start. Thanks, everyone. We'll talk to you soon, and have a great weekend. Bye.